Hello Wolfpack. It's been a bit of a wild ride this morning watching the charts as Bitcoin drops down further into this descending wedge formation, but it's good to remain sounded or grounded I should say, because everyone on Twitter right now is kind of screaming run for the hills. However, the way I see it is we're still within this descending wedge structure and we're still holding to uptrend at dotted line for support. Now, I am bearish in the market. I do think Bitcoin's going to go down further towards 24k at the 200-week SMA by the end of this year, right? And I've made that very clear in my previous videos, and I'll talk about it more in this video. However, I'm logical enough and I've got enough experience in the market to understand when Bitcoin is holding support and when Bitcoin is not holding support. As of right now, it is holding support. Will it continue to do that? That's a different question. The point is, we're not in free fall just quite yet, like people would assume we are. Okay? Don't fall into the fear. Don't fall into any of the over excessive fear, I should say, and just stay grounded a little bit. Now, should you be in the market right now? Should you be holding altcoins? No, not at all, right? The market is bearish. We're in a bear market. You shouldn't be holding altcoins. However, don't just go screaming and running for the hills like a lot of these people do, because this is not the time to be running for the hills. This is the time to be looking at the market and trying to figure out when the best possible entry will be. In my opinion, that's going to be a lot lower. However, it's good to keep observant and looking for those entries, because as of right now, as I just said, right, yes, we have broken down from a major bear flag formation. That's a fact. There's no denying that. From that, we can assume we're going to be heading downwards even further on Bitcoin, right? And that's a logical assumption to make. And I think that's going to happen in May. I have been a big believer in the May crash. I think there will be a crash in May. I think that crash has already begun, to be honest with you. However, I think it will be accelerating in May as we see some of these indicators start to play out that I'll show you in a second. Regardless, we're not in May yet. We haven't seen that interest rate hike yet, and I still think the market has a little bit of time to be stagnant. Okay, I still think the support will hold a little bit for now. Okay, and I don't want to make any of this, predictions in the shorter term, because let's be real, it's kind of hard to predict the shorter term on Bitcoin. Bitcoin is driven by a lot of things, and so predicting anything in under a week, is a little bit difficult. I prefer to use altcoins to predict shorter term. Predict shorter term on altcoins rather than Bitcoin. But as of right now, as I've just said, we're in a structure, descending wedge structure. It's a bullish structure in the short term. We shouldn't really be expecting anything at this point. We've had a major bear flag breakdown, and now we're immediately in a bullish structure. First of all, what the hell is that price action? It's very strange. Second of all, let's just wait and see what happens. I'm going to say I'm neutral on the short term. I'm going to say on the medium term and long term, I'm 100% bearish. Not even a doubt about it. Right, but the short term, very neutral, not really any idea what's going to happen here. Honestly, if I'm being completely honest, we could even see, once we test 37k, we could even see a swing back up and a retest of the bottom of the channel formation at like 41k, and that would be, some sort of resistance support flip, and then we can drop below. We could even see something like that. I doubt we're going to break back within the channel. It is technically possible, however, if we break that wedge to the upside. But, the point is, there's so many different scenarios in the short term, but it's almost illogical to look too deeply into it, because it's not something we can predict accurately. So why put so much emphasis on it? What we can do instead is put emphasis on the medium term and long term. I would like to point out in the short term, however, that we do have bullish divergence. We do have a primed MACD cross. But on the contrary to that, on the contrast to that, we have the 50 SMA, the Ichimoku cloud, the Gaussian channel, the bull market support band, the 75 SMA, and the center line of the Blinger bands, all in the region between 42.5k and 40k, right? So although we have some bullish stuff, we also have an overwhelming amount of resistance above us. And so, although I don't want to predict on the short term, I would say it's very unlikely that Bitcoin breaks back above 41k at this point. I don't think we're going to break above 41k. I think it's unlikely. And I think that as for below 41k, it's anyone's guess what happens in the next week or so. Now, what I am sure about, and what I have been pretty sure about, by the way, I'm going to look at Bitcoin dominance in this video. I haven't looked at it in a long time, but what I have been pretty sure about is the fact that Bitcoin has topped out. I've been saying Bitcoin has topped out since around 58k, right? I first said to people, get out of the market, run for the hills at 66k, and then I finally consolidated that opinion and said, okay, no, it's definitely a bear market at 58. So I've technically been bearish at 66k. Predicted the top based off a 4-year cycle theory, which played out perfectly, and that is suggesting, I should say, that Bitcoin will be seeing a bottom at the 200-week SMA in November to December, maybe earlier. It's very debatable on the dates, but November to December, according to my analysis, could be a little bit earlier. The thing that kind of goes against that is the fact that I think we're going to be seeing a major correction in May. Now, that correction doesn't have to take us all the way down to the 200-week SMA. In fact, I doubt it will, right? Because that's a 50% correction. It's a long way down to go, or 45%, I should say. But I think we will be seeing a major correction, and I've stood by this since January, okay? I've been looking at this chart for about a month now, and I've been looking at the other charts I'm going to show you since January. I'm just going to quickly skim over it because I've been over all of it before, and then we can get into some new content here. But before we get into any of that, we'll get into the BitGet Exchange. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to 153 USD deposited into your account as a reward. Okay, so you guys know me pretty well at this point. Or those of you who have watched me know me pretty well at this point for being a massive advocate for the fact we'll probably be seeing a May crash. My first piece of evidence for that is this weekly chart. You can see every time the 50-week crosses under the 75-week, as you can see by the color codes here, we are in the midst of a major 50% correction in about a month and a half in 2015, 2018, and that will be happening again in about 2 weeks or 1 week, right? So this chart is suggesting we see a major correction starting in about a week to 2 weeks. The 3-day chart, as you can see here, every time the 50-week crosses under the 200, which is a def cross on the 3-day chart, we see only moments after a major correction on Bitcoin happened in 2014, happened in 2018, and that will be happening again on May the 10th on Bitcoin. So that's another about a 2-week thing. So this chart's saying 2 weeks, this chart's saying 2 weeks, or, a week or 2 weeks. And then this chart here is another major one, right? This is the weekly chart. Okay, so not only are we seeing, let me just narrow this down quickly. Not only are we seeing a rejection of the 50-week SMA, the red line, which we've done previously in other bull markets, which has led to a touch of a green. We are also seeing, let me bring it up here. We are also seeing tightening on the Bollinger Bands, right? Compression or a squeeze in the Bollinger Bands, which suggests a big move is on the way. That big move most likely being downwards. We are also seeing the Gaussian channel slowly start to flip red, right? In about a week or 2 weeks, it will be flipping red. The only other times the Gaussian channel has ever flipped red in Bitcoin's history, let me say that again, is moments before a 50% correction in about a month and a half in 2014 and 2018. That will be flipping red in about a week to 2 weeks. So the evidence is ridiculously clear, right? It's not even a question. It's ridiculously clear that Bitcoin is probably going to be seeing a major correction in May, more likely than not. And my prediction since January on this matter has been, and this is kind of a side prediction. Do I really care if it plays out? No, my main prediction is 24K. But my side prediction on this matter has been that Bitcoin will be at 30K by early June, right? At 30K by early June. Okay, on top of all of this, and this is where we really start to get quite negative on Bitcoin, and this is another piece of evidence for a May correction here. The total cryptocurrency market cap, a chart that measures the total amount of wealth, dollars, in cryptocurrency, which is 1.67 trillion right now, has broken its major uptrending line forming since December 2020, and it's broken it, and now it's acting as resistance, right? It's literally broken down from this major uptrending line, and it is in a free fall right now. I would not be surprised at all if this chart goes all the way down to say 1.28 trillion to about 1.12 trillion in not so long at all, possibly by June, right? Again, another piece of evidence for the May correction. Now, obviously, there is more evidence coming from the macro, which we'll look at in a second. But first and foremost, let's look into Ethereum. Now, Ethereum is another chart that I don't really look at too often because Ethereum, as you guys would know, is mostly just driven by Bitcoin. Okay, so whatever Bitcoin does, Ethereum basically does, sparing an altcoin season, which hasn't happened for a while. I mean, last time it happened was in April 2021. As you can see, Ethereum saw this massive spike up while Bitcoin was stagnant, but it's not an altcoin season anymore, so Ethereum's just copying Bitcoin, I should say. Ethereum is still within its macro structure. It is still in a bear flag formation, and that bear flag formation, we can expect to see a break to the downside to around 1,300 by the end of the bear market. I assume, based off preliminary data, admittedly, there's not much data on Ethereum, Ethereum will be seeing 1.3K by the end of the bear market at the minimum, right? Maybe even below that point. But it's not looking good. It's in a bearish structure, and it's just kind of sitting in there still. Sorry. As you guys would know, altcoins are not looking too hot right now, as seen by the Bitcoin dominance chart, in which the Bitcoin dominance has spiked up in the last week from around 41.5 to around 42.8 at the peak. Okay, so Bitcoin dominance spiking up means that Bitcoin is gaining dominance against altcoins, which happens in a bear market as people flock into Bitcoin to try and get out of altcoins because they see altcoins as too risky, which is rightfully so, right? Because altcoins die in the bear market, Bitcoin doesn't. Okay, that's exactly what happened in 2018. As you can see, we saw the altcoin season. Okay, so we saw a massive drop on the Bitcoin dominance, and then we saw a massive spike, which was kind of resembling people kind of being scared, too scared to be in the market. So they just got all their money in Bitcoin and just run away. Because they know that Bitcoin will last, they don't know if altcoins will last. Very logical, actually. So yeah, not only is it a bear market, and not only based off that alone can we expect this thing to go up, we also see that we saw a triple bottom formation here on the Bitcoin dominance chart, and we're also in a descending wedge structure, which suggests we see a breakout to the upside, retesting resistance. So Bitcoin dominance is bullish, which again should be seen as another piece of evidence why we might be seeing a May correction, or at least a correction at some point this year, a bear market. But you know, another thing we need to look at, again, is the S&P 500. I know people who watch my videos regularly see all this information very often. You might be getting very sick of it right now, but it's the only thing to talk about. People need to hear it. We can't be talking about altcoins right now because altcoins are going down, right? You know, if we talk about altcoins, if you want to hear about altcoins, you join my Telegram group where I talk about altcoins every day and we take trades. But as of right now, this is the important thing to look at in the market, right? So S&P 500. What are we seeing? We're seeing interest rates decision being made in 4 days, right? Just like last time when we saw that interest rates decision about to be made, we saw a massive correction. When the decision was made, we saw a little bottom and we saw a little pump up. Now it's getting, you know, time for that interest rates decision to be made again. We're seeing a massive correction. We might see a little bottom at the bottom of this wedge and a little pump up, but ultimately I think this will break down and we will see a recession on the S&P 500 furthermore than we already have, and a economic recession in the USA for sure. Okay, so not looking good in the macro situation, and supporting that is, and as you guys would know, the S&P 500 basically, you know, dictates what Bitcoin does. If the S&P 500 goes down, Bitcoin goes down as well, right? So this thing being bearish is not good for Bitcoin, and this thing is bearish, let me tell you that. Now, and further supporting that is the fact, sorry, I'm just kind of remembering stuff here. Further supporting that is the fact that we've just put in a weekly close lower low as well, which is obviously very bad. Bond yields are very interesting to look at as well, because bond yields are basically a risk-reward ratio given by the government. So if the risk in the, if the risk in the economy is very high, the government will give out bigger yields. They're kind of managing that risk-reward ratio. They're giving you more reward for taking on more risk. And so bond yields dictate where, or give us a good example of where interest rates are going to go. If these things go up, interest rates generally follow it. Bond yields are reaching levels we have not seen since, for example, June 2019 or March 2018. If we apply that to interest rates, we can see that last time bond yields were at these levels, interest rates were at 1.75 to around 2.5, right? So it's kind of saying, and right now, as you can see, interest rates are at 0.5. So it's kind of saying interest rates are dramatically undervalued to the mark of 1.25 to 1.75 undervalued, right? So we need to add 1.25 to 1.75 basis point, or 125 to 175 basis points to these interest rates for it to be kind of in line with the market right now and in line with what the government itself is returning on bond yields. So there is evidence to suggest that we will be seeing massive rate hikes this year. And bond yields don't show any signs of slowing down too, so these things will keep going up, and hence interest rates will keep going up, and hence the amount of money an average consumer will have to spend will go down, and hence company stock valuations will go down, and on top of that, companies will be able to borrow less money, take out less debt, same thing with governments, and so there'll be less economic growth in the market, right? So all of that information, I know it sounds like a cluster, all works negatively against Bitcoin. Why? Because Bitcoin is still, like it or not, correlated to traditional markets. If traditional markets look bearish, Bitcoin goes down, right? That's not the end goal. The end goal is Bitcoin being independent and Bitcoin going up regardless. However, we are not there yet. People still see Bitcoin as the same thing as traditional market. Companies are still selling Bitcoin when they sell their stocks, right? That's why Bitcoin goes down when traditional markets go down. Okay, so although the ideal scenario, again, is Bitcoin does whatever, it's simply not the reality, and so we can't be living on fantasies because it's not the case right now, right? So now that all of that is covered, all of that information, I talk about that information quite a lot. Let's jump into some new stuff, right? Fear and Greed Index, right? Fear and Greed Index is quite interesting because generally speaking, a lot of bulls, specifically bulls, by the way, like to use this to justify buying in the market. Now, I want to ask you a question about the fear greed index, right? Yeah, it's extreme fear. Technically, that should say, oh yeah, you should buy. Technically, that's a buy signal. However, I want to ask you a question. What do you think the fear greed index said in 2018? Let's go to the 2018 chart here. In 2018, when we saw this massive 50% correction in like 5 weeks, right? From 6.3K all the way down to 3.1K. When we dropped from 20K all the way down to 5K in just a matter of a few months, right? What do you think the fear greed index says? It was saying extreme fear. Did that give the reason for, did that bottom out the market, right? Did it saying extreme fear actually prove true and the market bottomed out? No, right? We kept soaring dead cat bounces. People kept buying in because of extreme fear, and essentially we dropped further. Now, fear greed index wasn't around in 2018, but the point is that's what would have happened. So why is it different now, right? The fear greed index has been saying extreme fear since like 53K, right? We dropped all the way down to 33K. It's failed. It's a failed indicator. It doesn't mean anything. It doesn't work. Just because people are fearful, it doesn't mean the market needs to stop going down. That's a very important thing. A lot of people get in their mind that the majority is always wrong. Whatever the majority thinks is wrong, you need to go against the majority. It's not necessarily the case when the majority is the government, when the majority is the corporation selling their Bitcoin, right? It's not necessarily the case that majority is always wrong. Now, generally speaking, if you're in a bull market, the majority is generally wrong. Yes, that is correct. However, we're not in a bull market, we're in a bear market. The majority is bearish and rightfully so, right? So I'd also like to say as well, there's no accurate way we can get a demonstration of what the majority thinks. The only thing we can do is give polls, right? We can give polls on YouTube channels, and I can say, oh, are you bullish and bearish in Bitcoin right now? That's not an accurate demonstration because as of the last 5 months, I've been bearish in the market. So obviously a lot of people who watch me are going to be bearish. So again, that's biased. Whereas if you go to Moonboy Carl's channel, or the Martini guy's channel, or his big YouTube's BitBoy Crypto, and you put the same poll, they're all going to say they're bullish, right? Because there's biases between channels. There's no accurate, non-biased way to get an actual demonstration of how many people are bullish, how many people are bearish. And so using the argument that you need to go against the majority is illogical because, again, you can't actually understand what the majority does or, what they are. There's no accurate way to kind of get that example, right? So I think that's a ridiculous argument. I think that's what the fear greed index is based off, and hence it's based off irrationalities, and hence we shouldn't be using it. Right? That's my opinion on the fear greed index. I get a lot of people asking me that. I thought I'd quickly answer some questions about that. Now, moving on here. Now, we've got some YouTube comment questions from the last video that I want to read out. If you have any questions you want me to answer, go ahead and chuck them in the comment below. Because I like answering questions during the video. It gives some variety to videos, so people who watch my videos every day don't just get bored of the same content. There's always variety when you're answering different questions every day, and then we'll look into some Twitter posts afterwards. Now, in extreme risks, Hydrogen Atom, right, this guy, we've got 2 separate questions from him because I thought they were good questions. So he said, in extreme risk period like this, how much harder is it to find a coin you're willing to roll? So he basically says, when the market's very bearish, like how hard is it to find altcoins you're willing to trade? Right? The answer is, obviously, it's very hard. The answer is, it's not impossible, though, because you need to kind of lower your perspectives. Now, the way I like to trade altcoins in a bear market or in a bearish market, right? Because not every time the market going down is a bear market, but in a bearish market when the market looks bad, the way you want to trade altcoins is looking for dead cat bounces. You don't want to look for these 50 to 100% moves anymore because it's not going to happen. It's not logical. It's simply not, it's not going to happen, right? So instead of looking for that, you want to lower your expectations all the way down, right? You're looking for 5 to 10% scalp trades, and you're looking for short-term get in, get out. Because if the market is in a bear market, if everything's generally going down, if Bitcoin's generally going downwards, over a longer period of time, the longer you're in that trade, the more risk you're exposing yourself to because the broader market is dropping slowly. You want to be in and out within a matter of a couple days, right? And you want to be looking for 5 to 10% trades. And generally speaking, you want to be looking for trades off resistance, right? Because I'll tell you right now, let's just draw some price action right here. Let's say there's a triangle formation. Let's say the coin that's the bull market, it's come down, it's in a consolidation pattern, right? And you're looking for a trade here. Now, the vast majority of the time, if you're in a bear market, it's going to break downwards. And so what I would be looking to do rather than trade this triangle is look at that support block below and wait for that trying to break down, buy on the support block, see a little dead cat bounce, sell here, wait for it to drop down further, and then look for a buy again at lower support. You want to be buying like, I guess one way to describe it is like, a tennis ball, right? So a tennis ball is going to drop, right? It's going to drop, it's going to bounce, but every bounce is going to get lower and lower and lower until it hits the ground. The ground is the bear market bottom. You want to try catch that bounce. Every time it hits the ground and goes to bounce up again, you want to get in, sell at the top, get in, sell at the top. Those bounces are going to get smaller and smaller as the market gets more bearish, and eventually you're going to be able to buy the actual bottom, right? Easier said than done, but that's my method for trading in a bear market for sure. Now, how do I get back to these comments here? I think I've just scrolled away. All right, here we go. All right, what is the driving force behind the cyclical nature of Bitcoin? That's an interesting question. I chose this for a reason because it expands on the 4-year cycle chart. Now, the driving force, very simply, is the halving, right? It's called the 4-year cycle for a reason because the halving happens every 4 years and the halving triggers a cycle. Now, the halving happened in, I think, July 2016. Okay, what you'll notice is that in July 2016, we saw a shorter term bottom just before the actual run up, right? The halving happened in May 2020, right? We saw a short term bottom just before the actual run up. So the halving is the driving force behind the cyclical nature of Bitcoin. Okay, and another thing is hype, and another thing is institutional interest. Another thing is retail interest, but essentially it's all driven by the halving, right? Because that's what makes Bitcoin unique, right? If Bitcoin had inflation, if Bitcoin, didn't reduce halving rewards, people wouldn't be interested in it, right? Decentralized it isn't enough, right? And this cyclical nature of Bitcoin is very attractive, right? Because people love predictability, especially institutions. They love predictability because if it's predictable, they've got a lower risk, right? And that's why I like the 4-year cycle so much. People say, oh, I wish Bitcoin will just break away from this 4-year cycle and just go do a massive super cycle. It's like, why? Why would you want that? Because then you lose all predictability. And in a market where nothing is predictable, you're basically just gambling. If we have this predictability, if we know that Bitcoin's going to halve every 4 years, it's going to top out every 4 years, it's going to bottom out every 4 years, we know how to play the game. We have that in the back of our mind and we can make, good decisions based off of that. So I suppose that predictability is your friend, not your enemy, and that predictability is driven by the halving, which is kind of triggers the cyclical nature of Bitcoin to answer your question. The third question, head and shoulders pattern on the weekly chart. Now I wanted to talk about this, and this is not to shame the person who made the comment, by no means, right? I understand everyone here is learning, and that's fine. And I'm actually saying it not just to, target you, for example, but a lot of people tell me this. A lot of people tell me there is a head and shoulders pattern on the Bitcoin chart. To that, I would say I simply don't know what you're referring to. If you're referring to this being the left shoulder, this being the head, and this being the right shoulder, I would very much encourage you to try and get a better understanding of what a head and shoulders pattern is, because that is not a head and shoulders pattern. Okay, a head and shoulders pattern, very simply needs to be either like this, with an equal distance on the left shoulder, right? A higher head and an equal distance on the right shoulder, right? With a neckline that is straight, a straight neckline, right? Now that neckline can be diagonal. You can see a head and shoulder pattern like this, okay, where it's climbing. You can see a diagonal neckline, but you need to be seeing an equal kind of, or at least similar height on the left shoulder and the right shoulder and a taller head. Now, this chart here on the weekly chart for Bitcoin is very clearly not a head and shoulders pattern. That is just, it may vaguely look like one, but it's certainly not a clean one, right? Why? Well, because, this peak is barely higher than the left shoulder, and the left shoulder is nowhere near the same size as the right shoulder or the same duration. So I would say that's not a head and shoulders pattern, but let's move on to the Twitter segment. Okay, so this is an interesting post. This is by Dan Held. Now, I don't really look into this guy too much. I don't really know too much about him, but he posted something interesting that caught my eye. And I'm going to give you a controversial opinion on this, but I don't think people are going to like. It says, basically, years until 1 trillion market cap. So from Bitcoin's conception, from Telstra's conception, Tesla's conception, from Google's conception, Amazon, Apple, how long did it take them to reach 1 trillion market cap? And it's trying to subtly make a point that Bitcoin is being adopted much faster than other companies, products, whatever, things, I guess. Although that is the case, I would like to kind of put in my input here and say that that's not necessarily because Bitcoin is super superior or super more appealing. It's more that, more people have access to technologies than they did when these companies came out, right? For example, we're literally talking about Microsoft 44 years ago, right? It reached 1 trillion market cap 44 years ago. How many people do you reckon were investing in the stock market 44 years ago? Definitely not the average retail person. It was only institutions essentially, and people who were wealthy enough to go through those institutions to invest. We're at a time now that we weren't in it. We're in a time now with Bitcoin that we weren't in with any of these companies where, in the last decade or so, there has been a massive amount of freedom given to the average person in which they can invest in those stock markets and, cryptocurrency markets very freely and openly and with ease. All you need to do is download an app on your phone. Usually you'd have to go through an institution, you have to go through a financial advisor. Now there has way more people having access to that. And so of course, something like Bitcoin is going to get way more attention in a much shorter period of time. First of all, there's more people in the world, there's more money in the world, right? Also, $1 trillion is a lot less now than it was 44 years ago because of inflation. That's another point to keep in mind. And so I think that using things like this to say that, Bitcoin's somehow kind of superior and being adopted faster, although it might even be true, it's just kind of misleading, and it also just feeds into hopium, in my opinion, encourages people to long-term hold. And I don't have anything wrong with long-term holding Bitcoin. I just think that you need to be making educated decisions, not decisions based on kind of biased charts that don't take into account anything. Because the same person, Dan Held, is talking about inflation all the time, is trying to compare 1 trillion today to 1 trillion 44 years ago, which I just don't see as logical. And then another thing I wanted to talk about as well on Twitter. Again, I don't know who this is. TED Talks Matra. I just saw it on my timeline. I got nothing against these people, by the way. I don't know who they are, but I'm just judging the posts. Bitcoin has idolized Michael Saylor, the same guy who lost 13 billion in the dot-com crash, right? History doesn't repeat itself, but it also oftentimes rhymes. I thought I'd just leave that one with you guys because a lot of people really do idolize Michael Saylor. He says he's like the prophet of Bitcoin. He's like a god, right? He's like, oh wow, what a savage. He's buying all this Bitcoin. It's like, do you guys understand, how bad that is? That one person holds like 3% of the Bitcoin supply, one company. Do you understand how bad that is for the adoption of Bitcoin? Let me show you a chart. This is a chart kind of going over the wealth distribution of Bitcoin. As you can see, the top 1.63% of holders, right? The top 1.63% of holders hold 94% of the Bitcoin. Okay, so 94%. When you talk about wealth inequality, you can imagine how bad it would be if Bitcoin was adopted as legal tender or like whatever it is, the main currency. And then you get people like Michael Saylor who are buying it all up and you're praising them. It's like, I understand in order for it to be a free market, we need to have this uneven distribution. It's just a natural effect. However, you can't be praising people who are buying all the Bitcoin like they're gods when they're literally buying all the Bitcoin. It's not a joke when people say the whales have control. The top 0.01% of holders, control 42% of all the Bitcoin that will ever be, created. 42%. The top 83 people, okay, so 83 people, right? 83 people, that's not even a number at this point, it's so low. Control 14% of the Bitcoin. 83 people, 14% of the Bitcoin, right? So it just goes to show, how uneven that spread is there. And so it goes to show why you shouldn't necessarily be like praising Michael Saylor, and also, as this guy says, he's the same guy who lost $13 billion in the dot-com crash. So he's not exactly a good, reliable source. That's what I'd say. Anyway, guys, thanks for watching the video. Hope you enjoyed. Leave some questions in the comment section below. Crypto Academy, become a trader course. If you want to learn how to trade like me or like Mega Crypto, both excellent traders, call the top in November and the bottom in July and September and all this stuff. Come ahead and check out this course. You don't even have to buy it if you don't want to. Just email us. Come find out the course details. And you can email us here at thecryptoacademycourses@gmail.com. You can find out the payment details, course details, and everything, or answer any questions you have. This releases on May 16th. Okay, so you'd be pre-ordering for a lower price. If you wait until May 16th, you'll have to buy at a higher price. So get in now while the price is low. And I'm excited to see some emails from you guys. Thanks for watching. Hope you enjoyed the video. And I'll catch you in the next one.